Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Tech stocks drive a global rally with U.S. equities hitting fresh highs. Nvidia joins the $3 trillion club, briefly overtaking Apple. The ECB is expected to kick off its easing cycle and cut rates today by 25 basis points. Plus, we speak to the CFO of Saudi healthcare firm Fakeeh Group after its debut yesterday and the founder of African payments firm Interswitch. Well, good morning again, everybody. It's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Let's get you caught up on these markets because we did have a risk-on session yesterday. Very strong close for Wall Street with the S&P closing more than 1% higher, very much through that 5,300 mark. NASDAQ, very strong session as well, up more than 2%, piercing through 17,000. And of course, one stock as ever driving those gains. We'll talk more about it. Nvidia ending the day up 5% and briefly surpassing Apple as one of the most valuable companies in the world. Brent finally caught a bit of a bid. We are sitting at around 78.70, so we've rebounded about $1 from some of the lows we got to yesterday. And then Euro very much in focus ahead of that ECB meeting today, just sitting shy of 109. But let's flip over and talk about some of the price action we're getting in those key chip maker stocks. Nvidia very much in focus again, as I mentioned. $3 trillion club. There are only a handful of names in that club. Guess which ones they are? Apple, Microsoft, and Nvidia, briefly, as I said, overtaking Apple in terms of market cap yesterday. That's that yellow line. Very much depicts how much Nvidia has traveled over the last year. The stock is up more than 150%. But it is not just U.S. chip makers. Let's also take a look at ASML, a key supplier for chip technology in Europe. And you may recall not so long ago, Novo Nordisk, the weight loss drug pharmaceutical, overtook LVMH as the most valuable company in Europe. Well, recently we've seen ASML take the second spot, so also overtaking LVMH. Very interesting and just sort of highlights for you how much euphoria there is surrounding AI technology and the chip makers that go along with it. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Another risk-on day, Avril.
Oh, risk on. It is a Thursday turnaround, I think, and it is the stocks that are, really being helped along by tech shares. Take a look at the benchmarks, the Nikkei, the TAIEX. South Korean markets are shut today, but as you alluded to earlier, Nvidia crossing that $3 trillion market cap is lifting the mood in the tech sector. We are seeing currencies also climbing against the backdrop of a softer dollar. We'll, of course, be keeping a really close watch on the jobs data out of the U.S. tomorrow. But something to note here as we keep an eye on the yen is that it's paring gains after one of the board members, a leading dove, said monetary policy settings are appropriate for now. So that seems to be paring some expectations of hawkish signals from the BOJ next week. In China equities, we are keeping a close watch on the property sector. It doesn't really figure into the benchmarks, but we did see a gauge of property developer stocks slumping 20% from their May highs, really raising these questions about real estate worries in the country. Let's flip the board and take a look at what we're seeing in TSMC, because Jumana, as you said, is not just about U.S. chip makers. The Taiwanese ones are also doing well. It is at a record high, TSMC. It's gotten its price target upgraded by Morgan Stanley as Nvidia recently voiced the importance of TSMC's foundry services. We also see TSMC today announcing share buyback, so really buoyant on the stock today. Jumana.
Yep, it's chips everywhere, Avril. Thank you so much. That was Avril Hong in Singapore. All right, let's talk more about some of the major price action we're going to be watching out for today. It is ECB day after all, so let's bring in Bloomberg currency and rate strategist Ven Ram. Ven, great to have you on the show this morning. Big event is going to be ECB. The market is pretty much pricing in that 25 basis points cut. But beyond that, what are the investors looking out for?
Morning, Jumana. Absolutely. It's a kind of a do something but say nothing kind of meeting from the ECB. As you said, the rate cut is already baked into the price. It's a question of how much more are we going to get for 2024. That is the key question for investors. Are we going to get 2 more rate cuts after this, or is it just going to be 1 more? I think a lot of that will depend on what the Fed does. And I would be conservative and think that maybe one more rate cut is what the market should expect. This being a meeting in June, we also get the macroeconomic projections, the revisions to the macroeconomic projections. In March, the ECB thought that the inflation rate would be 2.3% for this year. I think that, in data since their April meeting have suggested that, inflation is going the other way. So there's likely to be an inflation revision, upward inflation revision, then upward revision to growth. So the key question for the investors, apart from all these things, will be the terminal rate. What happens beyond 2024 into 2025? What is going to be the terminal rate? If you look at the furthest pricing on Ester contracts, the markets are thinking 2.75 is where the ECB will get to. I think if you look at the Taylor rule, I think that the Taylor rule suggests that the rate should be 2.2% given the inflation forecasts. So the markets are not on the same page as the Taylor rule rate. So that's the interesting dichotomy that will drive the dynamics for the markets. Jumana?
Yeah, it's not about necessarily where they cut rates to, but where they eventually end up landing. Let me just square this up with the price action that we had out of the U.S. yesterday. That ISM services number surprised to the upside, so a bit of a difference from the ISM manufacturing number that we had the prior day. When you piece that together, what does that mean for the outlook of the dollar and, of course, the euro at this point, given that it's been in this tight 107, 109 range for most of the year?
I think that the euro is going to be treading water around this range because, a lot of the dynamics that have driven the euro this year have come from the dollar side of the equation. And I expect that to continue in the months to come, because we are seeing a huge shift in real and nominal rates on the US side, and that's where the inspiration comes from. Now, the ISM data that you suggested yesterday, yes, of course, it was stronger than forecast, but if you look at the employment sub-gauges, that is kind of moderating. So services is doing very well, but employment gauges are kind of cooling off. So from the Fed's perspective, this is going in the right direction, but that's all they can say for now. They need more concrete proof that the economy is cooling a lot more, i.e. the labor market, the jobless number. The Fed thinks that if we need to get to 4% or higher for them to cut rates. We are not yet at that stage. And if you look at the forecast for the jobless data that's going to come out tomorrow, they're still thinking 3.9%. That's not going to bring the labor market into balance. And therefore, I think it's going to be a while yet for the Fed to be cutting rates. That means that the dollar is going to be supported and the euro is going to be treading water.
Okay, well, let's see how it all pans out. Thank you so much for joining us this morning. That was Ven Ram, currency and rate strategist. All right, let's bring in another voice right now. I'm really happy to say that Paul Waters, S&P Global Ratings, head of Europe Credit Research, is in Dubai with us. Fantastic. Good to have you here on our shores. Let's talk about ECB today. How do you see the macro going forwards?
Yeah, so it's interesting. Obviously, we're almost certainly going to see the rate cuts, everyone's saying. The ECB signalled that very clearly. I think it's interesting because they've sort of, they're jumping gun a little bit. If you look at some of the key indicators that they're sort of watching, whether it's sort of, obviously the wage growth story, the service inflation story, which is still quite high.
4%.
Yeah, so that's, but more positively, obviously the credit transmission is quite weak. So that sort of supports the outlook for rate cuts. So so after that, our base case is that we'll still see 3 rate cuts this year. But obviously, as everyone's saying, as you've been saying this morning, I mean, it's data dependent, right? So we'll have to wait and see how that plays out.
Yeah, that's slightly more than the market is pricing in. Market's at 2.5. It feels like the narrative is changing regarding the ECB towards higher for longer. What sort of a credit impact is that going to have at a sovereign level, but also corporate level as well?
Yeah, I mean, actually, it's interesting. So for us, when we look at it, I mean, rates you've got to remember, rates are a lot lower in the Eurozone than they are in the US, right? So the impact is much less. But at the same time, you've still got a lot of fixed rate debt, which still has to refinance. And you've got a lot of mortgage rate in certain countries, mortgages which are sort of still fixed rate. So it obviously varies depending on which countries you're looking at. So there's still some sort of, there's still some... The rubber hasn't really hit the road fully yet in terms of the rate hikes that we've seen, and so obviously that feeds through to impacting cash flows for corporate credit, for instance. And while everyone's seen this coming down the road for a long time, there are still some vulnerabilities, but it's sort of systemically, it's not as we don't think it's as important as it might have been 2 years ago.
What happens when the rubber does hit the road? How bad is the credit climate going to turn?
No, I don't think it's
still benign.
I mean, the companies and sovereigns, we've had a lot of time to sort of, prepare for this. So, depending on where you sit in the credit spectrum, you have flexibility or greater or lesser flexibility to handle this. So, if you're talking about investment-grade corporate credit, you've got a lot of discretionary cash flow. If your interest payments are a real burden because you're a capital-intensive industry, you cut back on some of the shareholder-friendly payments, for instance, or CapEx. If you're in spec grade, it's actually much harder, right, because you have fewer levers to pull.
Yeah. Let me just ask you about France. The sovereign was downgraded by S&P last week. I think that was maybe not much of a surprise, but within certain parts of the market, people were looking at decision and probably refocusing on the debt dynamics of, a very large European economy going forwards. What knock-on effects does that have for the corporates? I know that there were subsequent banks ratings downgrades as well, but how do you see the outlook as well?
Yeah, I mean, obviously it's a very high-profile rating action, and as you say, I mean, we've explained very clearly. The fiscal, the fiscal consolidation hasn't been as good as we were previously expecting under our base case, and so looking further out, the budget deficit is still higher than even the French government was targeting, at the end of last year. So that's all fed into our view, and also the political fragmentation in France. To our mind. Suggests that actually it's going to be harder for the government to actually consolidate the finances in the way that we think they need to. In terms of what the knock-on impact is, I mean, it's very limited. I mean, in terms of the real impact on financing costs. I mean, you've seen, CDS in France are still trading as low as they have been in the last year. Spreads against Germany haven't, moved. They've moved very closely together over the last year. So, in terms of the real market impact, I mean, it's not that significant at this point.
How closely should we be watching the real estate sector in Europe? Again, I remember when we had all these banking concerns around the time of Credit Suisse going under, people started getting very worried about the state of commercial real estate, but things haven't really gone as bad as many had foreseen or anticipated.
Yeah. I mean, again, it's one of these areas that everyone can understand what the sort of real estate is, capital-intensive sectors. It's the most exposed sector to high rates, right? So, in certain it's very much idiosyncratic risk is the way we look at it. It's the real estate developers who are who have actually their finances are not as liquidity isn't as strong as it needs to be to actually sort of wait out a period of much higher rates. So, we don't see it as systemic in Europe. And also, you've got to remember that actually, the European banks are well capitalized and they have the biggest exposure to real estate in Europe. It's not like in the US where actually the regional banks have a majority of the exposure to a lot of commercial real estate.
That is a very important distinction to draw because of the amount of capital that these European banks are sitting on. Paul, fantastic conversation. Thank you so much for coming on our show today. That was Paul Waters, S&P Global Ratings Head of Europe Credit Research. And still ahead, we speak exclusively to the Interswitch founder and Group Managing Director Mitchell Elegbe about their delayed IPO plans. But first, India Prime Minister Narendra Modi winning the support of key allies to cement a governing coalition. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Well, in the last couple of minutes, we've got some breaking news. This is per the Wall Street Journal. They're saying that the FTC is probing Microsoft's deal with Inflection. So let me just give you more commentary here. The FTC is investigating whether Microsoft structured one of its latest deals with an artificial intelligence startup to avoid a government antitrust review of the transaction. Microsoft in March had hired Inflection AI's co-founder and almost all of its employees and agreed to pay the startup around $650 million as part of its licensing fee to resell its technology. So according to the Wall Street Journal, the FTC is now looking into this deal for potential violation of antitrust. So something to bear in mind as we think about Microsoft stock throughout the course of today's trading day. Now, on to our main story that we've been tracking the last couple of days. Indian Prime Minister Narendra Modi has won crucial backing from two key allies. It allows him to form a coalition government and extend his decade in power. Government reporter Sudhi Ranjan Sen joins us now from New Delhi. So just give us a sense for what these election results mean and what actually caused the big losses in some of those key Indian states.
Well, to begin with, what this election results actually mean, it's, of course, Prime Minister Modi severely weakened as a politician and as Prime Minister, because we've seen the Prime Minister going into the elections saying that his party is going to win three out of every 4 seats in the parliament. Clearly, that's not what people on the ground felt that was required, and therefore voted, in large numbers for the opposition. What that means is earlier we have seen the Prime Minister almost having the ability to push through any reform, any bill in the parliament. This time, it is not going to be so. He will need the consensus, the agreement of his coalition partners. That would be one of the major things that changes in the government that we see that takes over in the next few days. So that's going to be big. So reforms in the social sector, in the financial sector are unlikely to go as smoothly as we have seen earlier. Or in other words, if you look at it from the other side, he will not be able to steamroll the parliament.
Well, I've been watching the price action very closely, and it's clear one of the initial reactions from the investment community was to sell bonds, and there's some concern there about fiscal slippage. Policy-wise, what can investors expect going forwards?
Well, policy-wise, there will be continuity, and we have seen, not this government or Modi's government, but even in previous governments, there's largely policy continuity, even when governments change. But fiscal policy-wise, we can expect the fiscal deficit, there to be a strain on the fiscal deficit, because the coalition partners, all of which, or who have very strong socialist backgrounds, and also are carrying the message of a rural distress, because Prime Minister's party has not done well in the rural communities, in the rural seats. Therefore, we can expect an expansion of the welfare programs, although India runs the biggest free food program in the world today.
How reliable are Modi's two coalition partners? Is it going to be easy for him to run a coalition? He's never actually had to be in this position before.
That's one big question that everybody seems to be wondering, and it's $1 million question, because if one follows Prime Minister Modi's political graph from the days he was heading the state of Gujarat as a chief minister to the last 10 years as Prime Minister, he's never had to depend on allies. He's always had brute majority, whether in the state assembly or in the parliament, and therefore the style of functioning is much more top-down, rather than having a consultation and therefore changing rules, changing regulations, or a compromise. So whether that, how big a compromise, or what are the areas that the compromises are going to be, whether that dents or comes in as very critical areas that he wants to push, is something that everybody is watching very, very keenly.
Yeah, appears to be the case. Those stock markets seem to be back behaving again. Volatility has subsided. The government reporter Sudhi Ranjan Sen, thank you very much. Now, for a look at some of the other stories that are falling from the region, Israeli President Isaac Herzog says continued attacks by Iran's proxies in Lebanon leave his country no choice but to retaliate. He issued the warning after the military reported a number of launches originating from Lebanon falling in the area of Haifa in northern Israel. Herzog says, quote, Israel has no choice but to protect its citizens, and it should come as no surprise when it does so strongly and ever more resolutely. So keeping a close eye on what's happening on the Lebanon border. Also coming up on our show, the rand slumping after South Africa's election. We discuss the coalition possibilities next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Negotiations are continuing in South Africa on the formation of a new government. The ANC is said to be favoring a national unity arrangement comprising a range of political parties. Markets were spooked by the move as the main opposition party, the DA, has said it won't work with some of the more extreme right-wing parties. The rand slumped as much as 1.3% amid fears of policy uncertainty. Our chief Africa correspondent, Jennifer Zabazaja, joins me now from Johannesburg. And Jen, just bring us up to speed. What is the latest on these coalition talks?
Yeah, Jumana, this was really a new development for us over the past few days, just waiting for where these negotiations are going to go. So what we heard was from the National Working Committee, which is the smaller committee within the ANC, talking about, yes, as you said, potentially they are looking at a government of national unity. And they said, essentially, this is what the voters of South Africa asked for, and it could potentially be the most inclusive, considering what we saw in terms of the divisions in support. Now, they are not the ones that make the ultimate decision now today. What we're going to be really waiting for is the National Executive Committee. It is the larger body made up of 87 members, and they are the ones who are going to ultimately determine whether or not this is possible. Now, the interesting thing is that back in 1994, South Africa was governed under the national government of national unity with Nelson Mandela. So it wouldn't be the first time, but as you mentioned, many of these parties are so far apart in terms of ideology and policy, what they want to do, that it might just be difficult to get any sort of legislation moved forward. So that is really what the markets were reacting to on Wednesday.
And Jennifer, you spoke to the leader of Democratic Alliance yesterday. What are some of these smaller parties saying? The likes of Jacob Zuma's party, EFF, what have they said about the possibility of joining a coalition?
Well, the interesting thing that we heard from this working committee on Wednesday is that they said they've actually spoken to most parties except Jacob Zuma's MK party. They have not gotten any response back. We also heard from South Africa's Communist Party saying that they will not work with the Democratic Alliance on one hand. Also, the Democratic Alliance, as you just mentioned, has said that they will not be in a coalition with the MK or the EFF. So clearly there are still a number of divisions that need to be worked out in order to actually make this a government of national unity. But the interesting thing, Jumana, we did hear from one of the largest asset managers here in South Africa, that is 91. Henrik du Toit said he does welcome this. So we'll see really where these negotiations go.
Yeah. Jennifer, thank you for the latest. All right, also coming up, we're going to be speaking to Interswitch. We will bring you that interview in just a few moments. This is Horizons Middle East and Africa. Our top stories this morning. Tech stocks drive a global rally with U.S. equities hitting fresh highs. Nvidia joins the 3 trillion club, briefly overtaking Apple. The ECB is expected to kick off its easing cycle and cut rates today by 25 basis points. Plus, we speak to the CFO of Saudi healthcare firm Fakeeh Group after its debut yesterday, and the founder of African payments firm Interswitch. Well, good morning again, everybody. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. I want to bring you up to speed on the market price action because it was a risk-on day yesterday. S&P ending the session up more than 1.1% higher. We had stronger ISM services numbers come through. Bit of a break with the weaker manufacturing numbers we had the prior day, but does tell you that we're back to good news is good news for stock markets. A lot of price action focus has been on the Nasdaq as well. You can see it pierced through 19,000 by the end of the day, up to 0.5%, another record close. Nvidia clearly driving a lot of the momentum there. I'll get to that in just a moment. Brent somewhat gaining a bit of a bid this morning, up 0.5%. You can see just sitting shy of $79, but we're still down about $2 since that OPEC meeting. And then finally, Euro also in focus. It has been in a somewhat of a tightish range between 107 and 109 for the most part of this year, but the ECB are set to cut interest rates today. That's fully priced in by the market. The question for investors is what happens next. Right, our terminal chart today. Take a look at this. The combined value of Microsoft, Apple, and Nvidia has now topped all of China's market cap. This was a chart sent through by my colleague David Inglis. Fascinating to see, and really does encapsulate just how far we have traveled with some of these magnificent three stocks. And of course, the main bulk of that price action is coming from Nvidia. That stock itself is up more than 150%. Yesterday, up 5%, and has briefly overtaken Apple as one of the most valuable companies in the world. And it's not just Nvidia, also the likes of ASML, a key chip supplier in terms of technology, that lithography technology key here. And you can see that ASML has actually taken the number 2 spot in Europe, overtaking LVMH and just sitting behind Novo Nordisk. So a lot of momentum behind these chip stocks, the technology stocks, and the suppliers. All right, let's check in on how markets in Asia are faring as well. Avril Hong is in our Singapore studio. And Avril, what are you watching today?
Yeah, Jumana, it's about how that momentum is carrying through into the Asia Pacific as well. Look at how the TAIEX is outperforming versus the other peers in the region, and it's really being lifted by the stock of TSMC, which got its price target upgraded by Morgan Stanley. The AI complex really doing the heavy lifting in equities today, but we're also keeping a close watch on the Sensex, extending a rebound from yesterday. Of course, the Modi party has managed to kind of get the support from key allies, able to form the next government, and this is allaying some of the investor concerns. But as some of our equities colleagues have been flagging, for it to really extend that rebound even further, take a further leg up, it will need the help of institutional investors. In the meantime, let's take a look at how the rupee is faring along with the other Asian FX on a day that we're seeing a softer dollar really helping currencies in the region. It is not benefiting from that, pushing past the 83.46 handle on dollar rupee. Indonesian rupiah, something we're watching as well, yesterday falling to a 4-year low against the greenback, and there's some concern here because traders have been unwinding the carry trade. It's roughly flat against the dollar today. Yen, another one I wanted to highlight. We're seeing it pairing some gains. This is after one of the BOJ's doves actually said that policy settings are appropriate. So it seems like investors are adjusting their expectations of what we're going to get from the BOJ next week. Jumana?
Yeah, very interesting. And we also have to bear in mind that BOJ is coming. It's not just ECB today. Avril, thank you so much for that overview. All right, moving on. Nigeria is considering suspending import duties on staple food, drugs, and other essential items for 6 months to slow inflation. As part of a plan to get its finances in order, the government may also suspend some value-added taxes and stop borrowing from the central bank. Our next guest has a large exposure to Nigeria. Let's bring in Elegbe, founder and group managing director of African payments firm Interswitch. Thank you for joining us this morning. Let me just start off by asking you how challenging you're finding the macro right now in Nigeria.
Well, I think the situation with Nigeria is well known. It's quite challenging. We've seen high inflation, the devaluation of the naira. But despite that, a lot of entrepreneurs and players in the market see that the opportunities that basically made them to start their businesses still exist. And we are pushing and hoping that in the not too distant future, a lot of initiatives by government will come to fruition and we can begin to see some improvements.
Let me turn to the landscape for fintech within Nigeria. How do you compete with the likes of Flutterwave? They got a valuation of $3 billion. What makes Interswitch stand out?
I think fundamentally, Interswitch set out to solve some social problems, issue of access to cash, for example, the fact that you can use electronic means to improve life in general. has been our focus, and we've continued to do that. When we started, the infrastructure to drive such payments did not exist, but today we are very happy to see that in Nigeria you can move monies instantaneously. That has been because of the pioneering effort that Interswitch has put in.
Hot button topic. We keep talking about it on our shows, but AI, I just wonder, to what extent is AI making an impact or disrupting your industry?
I think AI is something everyone is thinking about. We know the benefit AI brings to any business from an operational efficiency point of view, the ability to customize solutions to meet the needs of customers. It is clearly technology that we all will adopt. We have seen a lot of institutions trying to adopt AI one form or the other. I would think the direction will be very positive for the country.
Now, let me ask you about your own listing plans. For a while, you floated an idea of going for a listing, an IPO. What's happened to those plans?
Well, I think Interswitch, as you may know, is largely owned by private equity. And at one point or the other, they will have to exit. And an IPO or a trade sale or a strategic sale is always an option open to us. At this point in time, I cannot comment on our specific plans, but it is true that at some point, we'll explore one or more of these options.
Interesting. Well, I know that you've worked very closely with the tech board of the Nigerian bourse to encourage tech listings within the space. Can you give us, a sense of what the team is actually doing to lure more types of these tech listings?
Yeah, the tech board is something that has been floated for quite some time. Timmy, who is the CEO of NGX, is something he's passionate about. We have discussed it. It's something Interswitch as a company would like to see happen in the environment. But there are a few regulatory issues that still need to be sorted out. But I think the direction of travel is that it is something that will likely happen. How soon is difficult for me to say at this point in time.
Okay, fair enough. Let me just ask you then where you see the biggest growth opportunities coming from within Nigeria, but then also within the African continent as well.
Both. Let me speak specifically for the case of Interswitch. We have been on this move to expand outside of Nigeria for quite some time. We are currently in East Africa, Kenya, Uganda specifically, even though we have customers in over 35 countries. The truth remains that while we have been growing in other parts of Africa, Nigeria continues to grow. So I'm unfortunately in the position to say that the ratio between Nigeria's contribution and the rest of Africa has remained the same in the last few years. So while other countries are growing, Nigeria also is still growing. So we've just remained, in terms of contribution, roughly at the same position we have been in the last few years.
And given what you just said about your growth expansion plans, can you give us a color on where you see the valuation of the company right now?
Unfortunately, I can't comment on valuation. I don't run the business or the business of valuation. I focus on the value I create for customers, and I hope that customers will reward us with their patronage.
I'm sure they will. Sir, thank you so much for taking the time to speak with us today. Mitchell Elegbe, Interswitch founder and managing director, joining us from Monaco today. Also coming up, Saudi's biggest listing of the year, Fakeeh, rises in its Riyadh debut. We speak to the CFO exclusively next. This is Horizons Middle East and Africa. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Well, Saudi Arabia's biggest listing of the year, Fakeeh Care Group, rose on its Riyadh debut yesterday. The company's IPO attracted $91 billion worth of investor orders. The Kingdom's stock exchange says over 50 firms applied for listings last month amid a flurry of public offerings. A lot going on the Tadawul. Joining me now is Panagiotis Chatziantoniou, Fakeeh Care Group CFO. Thank you so much for joining us on the show, and congratulations on the IPO. Why did the timing of this IPO make sense for you?
Thank you very much, and good morning to you and to our viewers. This IPO is very critical for Fakeeh Care. It comes to the right time, is a pivotal moment for Fakeeh Care in its growth journey. Fakeeh Care has been growing for the last 10 years, but now is the time to move on a more regional landscape, capitalize on the brand, on the strong brand of Fakeeh, the quality. So it's the right time to invite investors to participate in our growth story.
Yeah. Well, at the time, you obviously couldn't foresee that there was going to be another secondary share offering happening at exactly the same time. Aramco, obviously, I'm speaking about that. Do you think that demand for your own IPO was somehow dented by the fact that Aramco was also pursuing a share offering at the same time?
Actually, the demand for Fakeeh Care was phenomenal. As you said, 119 times oversubscribed. We met and we spoke to many investors, both local, regional, and international, and we experienced a very strong growth. Investors are looking forward to invest in the country, to participate in the growth story of the country, the transformation that we are experiencing, and more so on our sector. The health sector is robust and will grasp the opportunities of the transformation program and the demographics that we expect to develop. And this is the reason that our IPO was oversubscribed multiple times. You mentioned about
I saw one of your cornerstone investors.
Yes.
No, please go ahead.
No, I was talking about, you probably meant about Saudi Aramco. Of course, we cannot time the transactions of other participants. And of course, this was a 13 billion transaction in dollars. However, although this coincided, we were very pleased with the development of our IPO and even the first day of trading.
Very clear. What I wanted to say is that I saw Adia was one of your cornerstone investors. This is actually the first time, I believe, that Adia has participated in a Saudi IPO as a cornerstone investor. How important was it for you in order to go ahead with the listing to have such a strong anchor order?
Of course, it is very encouraging to see sovereign wealth funds and family offices that give a vote of confidence to the country, to the Fakeeh Care IPO, and the move into Tadawul main market. Perhaps the investors, they do appreciate the developments in the country, and they definitely see the value in Fakeeh Care brand, the growth trajectory, the plans, the robust plans that we have for the future. We intend to almost double our bed capacity. We're going to develop more our hub and spoke model, which we pioneered in the country, and also Fakeeh Care is a fully integrated ecosystem with an academic care model. Our hospitals are known for the academic care. We have the biggest training program of doctors in the country. We implemented our college in 2003, and now we have more than 1,800 students. We have 14 academic programs, and part of our plans is also to expand in the center of the country our medical presence and academic presence.
Yeah, well, healthcare is also one of the major pillars of Saudi 2030, so it fits nicely into the kingdom's vision. Let me just ask you, when you talk about your expansion plans, to what extent are you also going to be relying on acquisitions to help boost growth?
Our expansion plan is already defined in our prospectus. We have certain assets that already come to the market this year. We contracted lands in Makkah And also, we have acquired land in North Jeddah, where we're going to build a 300-bed hospital. We also have secure lands for our ambulatory centers. So our projects are all robust and well defined. We are ready for the next step of our journey.
Yeah. Let me just round up by asking you a question that I've been putting to many of the C-suites in the last couple of months, and that is, to what extent are you seeing opportunities for artificial intelligence in your space? How is that going to disrupt the healthcare sector and what you're planning to achieve with the company?
It's critical to deliver a value care model. Value care model also is about care, but also about efficiencies. And we already have started experimenting artificial intelligence in our operations. We have our own Fakeeh tech company that also is involved on similar solutions. So we are very focusing on technology. And indeed, we're ready to invest more and optimize our operations to become more efficient and to deliver this value care model concept that all the country will move into. Your previous question was about M&A. Sorry, I missed it. We are expanding. We're expanding organically, and if opportunities arise in the future, we also want to be perhaps open for potential M&A. Our sector is heavy on investment. Every hospital requires significant investment, significant amount of capex. So you need to raise equity, to have a strong balance sheet, but also you need speed. And speed also, expansion comes with acquisition perhaps, which also brings synergies. So we are not, we don't have a predicament towards M&As, but we're going to be happily listening to anything that will happen in the market.
Fascinating. Well, thank you for the insight, and congratulations again on the IPO. We really appreciate you joining our show today. That was Panagiotis Chatziantoniou, Fakeeh Care Group CFO. Now for a look at some of the other stories we're following. Saudi Arabia wants to be a hub for chip design as the kingdom looks to develop away from crude oil. It's announced the National Semiconductor Hub with a goal to draw 50 firms to the country by 2030. The program will focus on simple chips manufactured internationally rather than challenging Nvidia or Intel on cutting-edge and politically sensitive technologies. And Saudi Aramco is lowering prices for all of its oil to Asia next month, the first reduction since February. A pricing sheet says flagship Arab light crude will be cut by 50 cents to $2.40 a barrel above the regional benchmark. It comes after some OPEC Plus members, including Saudi Arabia, agreed to gradually roll back voluntary supply cutbacks starting in October. And coming up, the ECB is expected to kick off its easing cycle and cut rates later. We are live in Frankfurt for the preview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. It's ECB Day. The European Central Bank is expected to start lowering interest rates from record highs today due to confidence that inflation is sufficiently contained. The cut has been widely hinted at by officials in recent weeks. I'm very happy to say that Bloomberg's Lizzy joins us now from Frankfurt with a preview. Lizzy, everyone's expecting this 25 basis points cut today, but some people are saying that it might be a one-and-done situation.
You're absolutely right, Jumana. Today is the day that the ECB is finally expected to diverge from the Federal Reserve and the Bank of England. This quarter-point cut to 3.75%, well telegraphed, fully priced by markets, and almost unanimously expected by economists. But the recent economic data has kind of cast a bit of doubt on the rate path ahead. we've had a real level of commitment to today's cut, even from the hawks on the Governing Council, the likes of Isabel Schnabel and Joachim Nagel. But then we've seen inflation sticky, wage growth rapid. So as you say, the focus today very much on what happens beyond June. We're going to look to the forecasts for clues. Do we see an upward revision to inflation in 2026? That would suggest that the bar is going to be high for cuts ahead. And of course, we're going to listen very closely to Christine Lagarde at the press conference as clues to the cadence of cuts. As you say, do we get them quarterly from here on out, or do we get a pause and a return to data dependence? It's going to take some seriously strong signalling from Lagarde, perhaps, to suggest that we're going to have sustainable weakness in euro-dollar.
And I suspect they're looking across the pond to see what the Fed are doing. And it's interesting that I believe this is the first time in history the ECB actually cut rates before the Fed. How is that likely to impact markets?
Yeah, I mean, Jemana, the situation in the euro area and the US has been very different. We've talked about this a lot. The start of the inflation crisis was different. In the US, it was about massive fiscal stimulus. In the euro area, it was more to do with the energy crisis after Russia's invasion of Ukraine. But at this point, people are drawing parallels because of the concern that inflation is going to be harder to tame, that policy easing now becomes policy errors later. And if you look at all of that recent data, it hasn't been ignored by the Governing Council. The likes of Schnabel and Nagel saying July is pretty much off the table, and Holtzman saying that he only sees 2 cuts for the rest of 2024.
Yeah.
So look, the situation on both sides of the pond, perhaps not that different, and perhaps not so much divergence.
Yeah. Lizzy, thank you so much. I look forward to your coverage. And that is it for our show today. That is Horizon Middle East and Africa. I'm Jemana Versace in Dubai.